Hey everyone, Adrian here. Welcome back to another video, and I just wanted to do a quick one here on split share fund overnight offering. It's still a question I keep getting, even though I covered it a million times. So I figure I actually go back to some Q&As I did with split fund managers. So I have the clip saved. So by the end of this video, if you watch it, you will know exactly what an overnight offering is, what it does, why they do it, etc., etc. Is it good? Is it bad? Those are the questions we need to answer. So usually when an overnight offering happens, the latest one, for example, the Real Estate Split Corp did one on October 23rd, overnight, right? 2024, October 23rd, 2024. So typically you'll see the stock symbol gets halted, right? You'll see an announcement on the fund gets halted, and then the next day you'll see a news article saying, Real Estate Split Corporation announces successful overnight offering. So what is an overnight offering? Why do they do this? What exactly does it mean? Well, let's hear what Dino Rico, who actually is the CEO of Middlefield, who manages RS. I asked him this question 2 years ago, and this is making me laugh seeing this. So this is actually when we were staying in Panama for the winter in Coronado Bay for the first time 2 years ago. So let's see what he says.
Concern I always get is the overnight offering. So as we know, split share funds, they're closed-ended funds, right? So a lot of people have my opinion, wrong impression that overnight offerings actually dilute the value of the shares. It's a negative thing. So can you explain what overnight offerings are and what exactly they do to the fund?
Sure. It's a great question. And I think we need to start with what do people mean by dilution? Dilution isn't just issuing more stock, Adriano. Dilution is really when you issue stock at a price that is less than what it's worth. So just to take that last example, on ENS, if the NAV of the Class A share is $16, we would be doing a dilutive offering if we were issuing Class A shares from ENS at less than 16. Right. And in fact, we cannot do that in these funds. We have to issue stock so that the net proceeds is greater than what they're worth. So almost by definition, they are always accretive. We are issuing stock, but someone's value is not diluted or decreased because we are issuing it at a higher price than what it's worth. And I think that's the best way to look at it. So when we do overnight offerings, which we've done several of them over time, they are always done on an accretive basis, i.e. the net proceeds raised are always worth more than what their value is.
Right. So this is why they're typically done when the fund is trading at a premium, not a discount. Right. So would you say that this is actually a good thing, a positive thing, because you're giving out shares at a higher price than they're actually worth? Wouldn't that be, like you said, accretive, right?
It is by definition a good thing because you're actually, when you issue stock at a value higher than what it's worth, you're actually increasing the value of that. The NAV goes up plus, Adriano, when you have your fixed costs of running the fund, the larger the base of the fund is, the more value there is. Those costs on a per share basis actually go down. And lastly, the more stock that's out there, the greater liquidity you have. So people who want to trade these things have more liquidity. So there are a number of benefits by doing these accretive offerings.
So that's a perfect explanation from Dean. So, in case you don't understand what we're talking about here, when overnight offerings are done, everyone, first of all, they're done because split share funds or closed-end funds, there's a set number of shares. So if we just open up the latest one from RS, for example, and you'll always see this the day after, you'll always see a press release the day after anyone does an overnight offering. At what price are the shares actually issued? That's what we mean, or Dean is talking about, when the price that the stock is issued, the new shares are issued, is always less than, it's the opposite. It's always more than the net asset value. So for RS, pretty big mistake there, always more than the net asset value. So the shares you see for RS Class A were offered at $12.90, and if we look at the latest NAV, the net asset value is $11.73. So the shares were offered at a higher price than what they're worth. So that's why they're not dilutive, and you actually see that they write to be non-dilutive, right? In the actual press release. So that's basically why what they do, or what an overnight offering is. The key is to look at the price that they're actually offering the shares. And again, these are closed-end funds. So to issue more shares, they have to do an offering. It's kind of like, think of it like a mini IPO where they're offering shares, but they're offering it higher than the value, so it's non-dilutive. It's accretive, which is the opposite of dilutive, and you have the benefits there. So another thing that Dean discussed, the fund is bigger, so there's more volume, there's more liquidity, there's more volume, costs go down. So overall, by definition, it's a good thing. And people panic because typically when an overnight offering is announced, the next day the stock price drops. So if you see RS, the price was $13.21, the overnight offering was done, and the next day the price opened at $12.64. That's completely normal because they're issuing a lot more shares in one day. So more shares, that's going to bring the price down. So a lot of people, this is why there's a lot of negativity or negative connotations around it, because they think it's, first of all, dilutive, which is not the case at all. It's actually the opposite. I keep seeing people saying they're diluting the fund. It's not. It's actually the opposite. Please, for the love of everything, stop saying that. Stop confusing people, giving them the wrong impression. It's a good thing. But the price will open much lower, typically 3, 4, 5% lower the next day. But guys, it's, it went from 12, for example, 13 to 1264 or 1260, whatever it was that day. But if you look at the net asset value, it's 1172, right? So they're issuing shares much higher than the net asset value. RS, for example, is still at a premium. You're still paying the stock price, 1264, is still higher than the net asset value. So overnight offerings, in short, are a really good buying opportunity, because you basically, the stock goes down 4%. So you have a buying opportunity. And yes, I get it. The fund is still trading at a premium in this case, but the premium is much smaller because now the shares are at 1264 instead of 13 or whatnot. So, but that's just middle field. What about Brompton? What about the queen of split share funds, Michelle Tira Borelli, the very photogenic Michelle? Of course, she's Italian. Let's see what she has to say about it. And this was conversations actually a few months after this conversation. You could see I'm back in Montreal and I'm packing my stuff because I'm going permanently to Panama. So it's just funny. It's just taking me down memory lane. It's just crazy that this is literally 2 years ago. Time absolutely flies.
So what are overnight offerings? Let's start with overnight offerings. And the biggest question I get about them is, does it dilute the net asset value or the value of the fund? So let's start with those.
Okay, so overnight offerings are a way for the fund to issue new shares to investors, and it can increase the overall size of the fund. These offerings are not dilutive to the NAV of the fund. Whenever we do an offering, the shares have to be priced at a level where the net proceeds will not be less than the NAV. And because the shares are always issued at a premium to NAV,
right,
the offerings are often accretive.
The shares are always issued at a premium to NAV, higher than the NAV,
which means they can help increase the NAV. And as the fund grows larger from overnight offerings, this can also increase the trading liquidity of the shares and can reduce costs because you're spreading some fixed expenses over a larger base of shareholders.
That's great.
So that's literally pretty much exactly what Dean said, right? Exactly word for word. And I mean, Middlefield, Brompton, and there's Quadravest. Those are really the three big players. So you've heard it from both Middlefield and Brompton, everyone. And here's another example of DGS doing an overnight offering. It's the same thing. You'll always see the same thing. The stock's going to be halted. The following morning, the stock's going to go down by 3, 4, 5%. Great buying opportunity if you like that split fund. And there's going to be an announcement at what price the Class A shares were issued. And you could be 100% sure because legally they have to issue them higher than the net asset value. You also see here non-dilutive. It's non-dilutive, right? So you could go back and see many split funds have overnight offerings. Middlefield tend to do a lot of overnight offerings. Brompton as well. Quadravest, no, they tend to do another thing I want to talk to you about. So I just hope by now you guys understand what overnight offerings are. I'm just thinking if I miss anything. So yes, the stock price goes down the following morning, but that's because, remember, split share funds are corporations. They're closed-end funds. They're corporations. That's why they have corp at the end of their name. So they're issuing more shares. It's the only way for them to do it because it's not an ETF. It's a closed-end fund. ETFs are open-ended funds. They don't have this feature. So they issue more shares this way, and it's non-dilutive. It's by definition, like Dean says, a good thing. The way I see it personally, it's a buying opportunity. If you like the split fund and you want to buy more, you're basically, the stock price goes down 4%. The premium to NAV narrows. In this case, buying it at 1264, buying RS at 1264, yes, it's worth 1172, but it's better buying at 1264 than at 13. You understand what I'm saying? So the premium to NAV is narrowing, so it's a good opportunity. So this is way number one, that split funds issue more shares. Another way, a little bit more of a subtle way, this is what Quadravest always does typically. It's called an at the market equity program. At the money equity program. You see it multiple times. Typically, it's once a year, and then they could renew it. DGS also has been doing that lately. Instead of overnight offerings, they've been doing at the money equity programs here. Here's another one. April 14th, 2023, August 27, 2024. So what is an at the money whatever this thing is? It's basically, it's another way or a second way for a split share fund to issue more shares. But think of it like, instead of doing it in one night, a big chunk in one night, a big shot, they could do it very gradually for like every day for a year. So it's a little more subtle. You won't really see it, but they're basically doing the same thing. They're issuing shares at their discretion. You know, typically they say we're going to do it for a year. You could read here the program, when it ends, etc., etc. But they're basically the same thing. They're issuing more shares higher than the net asset value. They still have to do it higher than the net asset value. So they could only do this basically when the shares are trading at a premium. The share price is at a premium to NAV. And it's for the same thing. It's to make the fund bigger. More shares makes the fund bigger. It's accretive. It's not dilutive. It increases the volume and it lowers the cost. So that's the other way. And typically this is the method that Quadravest always uses. And I had the opportunity of having dinner with Chris Cullen from Brompton, not Michelle, but Chris Cullen, who manages the ETFs. But before Michelle was there, he managed everything. So Chris knows everything about split funds as well. He said that this, you know, what's the difference between the at the money equity program and the overnight offering? Well, he says the at the money equity program is just a bit easier to do. It's a bit less work, but essentially it's pretty much doing the same thing. So that's it, everyone. Hopefully this it puts the nail in the coffin to overnight offerings. Again, they're offering new shares. They have to offer the shares at a higher price than the NAV, so it's not dilutive. I repeat, it's never dilutive. It's always accretive, and it's always a good thing. And the little extra that I think about them, it's a good opportunity to buy more if you really like that split fund and if you want to average down or whatever, because the premium is going to be smaller after the overnight offering. So give me a thumbs up if you learn from this video. I would really appreciate it, and see you next time.